smile with the same. Love what you got and remember what's at hand. Messing with the ones who helped me in the times when I was letting go, didn't even have a dime. My family laid me down, my niggas laid me down. The rest of y'all left me for dead, didn't care. I used to have dreams, living large in this thing. And by the grace of God, I'm still alive in this thing. I strive in this game, to get all that I can. Never said I'm the lane. Respect me as a man. To you one, think I owe you something. Now that's a joke. Think your bag coming with you something. I love you, bro. Either chill, either do. You can love, you can hate. Either go and get your own, or you can't sit and wait. On the next way to come up, you can beat this. You can't do what I do. I know your business and
Lost Boy.
yeah. Do my status. No, I'm not bragging, I'm not average. I'm on a paddock. I bought up a whip and I told her stop nagging. Too much jewelry, my diamond is blasting. I bought it up back in. The club is packed in. You step in your city, we going in. Drop the top, let's go to win. The cops, we going big. Niggas out here hate the kid, cause I'm running up what you supposed to do. Bitch, I'm a player. Nigga, we're trapping the chicken in the mill. Yeah, look at my lips. Designing my jacket, I'm handing out bills. Yeah. As soon as I said they wanna go tell. Yeah, the way that you play it. Niggas out here be doing 12. Stitch. Nigga be out here snitching. Dang. Snitch. Nigga be out here snitching. Stitch. Nigga be out here snitching. Dang. Stitches. Nigga be out here snitching. Dang. Stitches. Nigga be out here snitching. Dang. Snitches. Nigga be out here snitching. Snitches. Be out here snitching. Up, remembering got demons in cash. Walking up in it, I shift up the blunt. Fuck up your lady, no feelings in that. So that's your mom, cause she holding the blunt. Yeah. Walking. They walk about it. It's never a day I don't walk without it. Shoot a nigga, never talk about it. Cause these niggas be brags. I had to shoot it in class. I had them need at the task. Fucking my shit, I had to lose bags. The Quavo tell me get him. Then I'ma do the dance. Stitch. Nigga be out here snitching. Dang. Snitch. Nigga be out here snitching. Stitch. Nigga be out here snitching. Dang. Stitches. Nigga be out here snitching. Dang. Every time I come to your store, the cat sleeps on the bread.
Lost Boy.
You have any idea where you're stealing from? You and your friends are dead!
He's out, right?
They wired this thing up with like 5,000 volts. What kind of bank does that?
A mob bank. I guess the Joker's as crazy as they say. Where's the alarm gun?
All right, what is going on? What is good, man? Welcome to the live stream, Doc. Welcome. Hope you guys came in ready to learn something today. As per usual, right? As per usual. What's good? Scott, Sean, Eberneth, Marshall, Rand, 2020, Alex C, Jorks, Natasha. Natasha, what happened to that sniper badge? Where did it go? What's good? Mason, Willow, MJ, and everybody else. who will be here late. They probably won't like the stream either, you know, but I'm gonna provide value no matter what. No matter what. You know what I mean? Do you know what I mean, chat? With the haters, without the haters, with the viewers, without the viewers. Either way. Either way, dog. Right, Young Flo? Right, Shay? Right? So anyway, how do I even put this the right way? There was a little bit of justifying both sides, and I did not decide whether to trust electronic trading hours or regular trading hours, so I did let it go. But by the time I took a break from the charts, that's pretty much when we got a really good opportunity. So can't catch them all, baby. It's not Pokemon, right? But we'll talk about it. I'll answer whatever questions that you guys have. I have 2 questions for you, though. Right? You guys always get the questions. Sometimes I have to ask questions, too. Here's 2 of them. Number 1, did you do your weekend reflections worksheet this weekend? It's Monday, so that means you had all day Sunday yesterday. You had all day Saturday, right? So you had 48 hours, not including Friday, to do a worksheet that takes maybe max 10 minutes. Right? So if you could not fill out a worksheet for 10 minutes in 48 hours, I question your seriousness and your development as a trader. You know what I mean? I'm kind of questioning your loyalty is not the right word. It's dedication, right? I'm questioning your dedication. If you can't do a 10-minute worksheet in 48 hours, that screams that I don't give a damn. That's what it screams. Right, Roger? Good morning to you too, my friend. That's what that screams. The same way we're about to scream above 23,050. That screams to me that, well, John, you know, I don't give a fuck, man. I just couldn't care less. Fuck that worksheet. That's what I hear. But great job, Scott. I appreciate that. We got 1 person out of 200 and something members. We got 1 member that did their worksheet. So that's what, 0.5% of you? Hopefully we got more than that. But anyway, it's your career, not mine. Keys to elite performance. That is what we went over on Friday. Can you tell me what those 5 are? As we get this run above 23,050. I didn't put an alert on that. But that is a level from last week, from the 10th. Over there. In the electronic side. There's your 50. But we need to see a run above it. We shouldn't just kiss it. Shouldn't just be a kiss goodnight. It should be a full-on rally above that. Was good, Ricky. It's Friday's high. Bang. Previous day high. Typical target. Oh, yeah. Friday, I believe Friday's high was here. And that's also low resistant highs. When I'm speaking to everybody here. My personal favorite, right, is not just like a previous day high or a previous session high, but when that previous day high, previous week high, previous session high is also low resistant highs, bro, that is just so easy. So easy. And then it's the same thing here. Although again, just to clarify, Friday's high is this one, right? With the low resistant highs. And then what's above that? Is there anything bearish in here? Fuck no. That up candle? Absolutely not. The next thing it would reach for is these highs here, which I think Thursday's equities is there. PM session highs, I think, are those. And you see how easy that was for price to get there? So yeah, that was beautiful. Was good, Brian? That up candle is Friday's high. This one? Or are you talking about this one? We blasted right through that. We actually kind of hesitated a little bit and then finally got the extension there. So because, and again, if we do like the same sort of analysis as far as like, okay, well, what can it reach for? We don't have any imbalances there. So if it continues, it shouldn't stop in anything in here. It should trade above that high. Like that one. So, and again, like, don't let me influence your trading. I'm not in a trade, not in any futures positions anyway, but if I was and I had multiple contracts, this would absolutely be a partial for me. I would not hold probably more than one runner to see if we could get above that, because it doesn't have to. But you know what I really like about today? And again, this is what I did not trust personally. Even though if I would have actually looked at ES as well, I would have been able to come to a better conclusion. But I wasn't in a rush to trade today. Friday's low is here, right? Friday the 11th. Today's Monday the 14th. So Friday the 11th is here. We have swapped to regular trading hours. Okay. So we were looking at electronic. That's why there's the two labels. ETH is not Ethereum. It's electronic trading hours, pointing to those lows. And RTH, right? We swap over to regular trading hours. Okay. So the regular trading hours had these highs here, those right there. And again, like the one that I pointed out up there, if we get continued bullishness. But my favorite thing about today, I always show you guys this shit because it's so textbook. Like one of you posted in the chat. Monday, right? Our equities open. If we're going to go higher, we typically do what? Go lower first. Boom. Right? So we slam down in the first 15, 30 minutes or 15, 20 minutes. Right? Quick math for you. Taking anybody who was long from Friday and held over the weekend, got them out of there. Boom. Turning point. See that shit? Magical. And then what inevitably, or sorry, I'm like half asleep. What inevitably happens? What manipulates typically mitigates. Right? Real hard. Right? I probably could have been a rapper, you know what I mean? I probably could have been. What typically, or excuse me, what manipulates typically mitigates. So do we have a mitigate? We swap back over to electronic, by the way. Okay. Now here is 820 to 825. That is pre-market. Eberneth. That's pre-market. So that would have not been seen in regular. Okay. I'm not rapping for you guys. I can't freestyle. I can't freestyle for shit. You don't want that. I freestyle my lesson plans, but I don't rhyme. Okay. I don't do that. But there's your run. Again, this one I believe was, don't let me lose you here. Watch this. Friday's regular trading hours low. low of the day. I mean, we could label it AM low or PM low. It's the whatever low that was, okay? So that gets taken here. And that's why some people get confused when we swap between the two, because remember, in electronic, it looks like that low's already been taken. You're like, oh, well, why the fuck would I trust that low here? Because what if that low wasn't there? What if we had like a higher low up here? But yet that low gets taken here. Again, because it's not just price or context, right? The key element, one of the key elements is the concept of time. Not just price, not just context, but you need time for elite performance trading. The right asset at the right time with the right price and the right context. You get the bangers, right? So that low taken here. Then we actually get a higher high right there. Body's higher here. Now, by this particular point in time, 9:20, we're in the 9 o'clock hour, no big deal. And right, I guess if we're looking at structure, okay, with a higher high, if we measure our, it would be called technically a dealing range. Our 50% level is here, right? Why should we not go below that after this here? Because, as I've already explained, Friday's low taken here. Even the electronic side had some lows from pre-market London that got taken as well. Now, me, when I look at that fast-ass movement like that, in that moment, I don't know if it's going to reverse from there or if it wants to run down here. Now, again, you could long that like I did ES last week. You could. I didn't look at ES, right? That's kind of where like my laziness bit me in the ass. Okay. Let's come back for a bit. That low being set, then we trade. Now we're near 75%. So now it's like, okay, we've already worked our way lower. We've already worked the 50% level here. Remember, and if you're not taking notes, you're fucking up, okay? And I did that on purpose. If you're not taking notes, you're fucking up. The 50% level in a buy program is a discount level. You can long that 50%. Or, I'm not going to say safe because obviously trading involves risk. But a lot of the trades that I've been taking the last couple of months and have been showing you are in premiums. Because the market by now is so primed to go higher, right? See, we got our run. We shouldn't have just stopped there. We should actually get a run above 50. Look at that. We're in the 60s. That's not hard. This happens all the fucking time. Okay? If it ain't bearish and it's got a higher pool of liquidity, that's what it's going to reach for. Okay? We already worked our way lower. We already did some business at the 50%. Then we traded higher. What manipulates typically mitigates. There it is right there. Okay? You could put those two up candles together if you like. That's what you're supposed to do when they're consecutive. If it's a really, really bullish market, it probably will respect the higher one, in which this case it does. You see that? So could you put your stop at this low? That might be a little tight, to be fair. I wouldn't be surprised if Ricky did that. Ricky knows how to, finesse those lows and have tight stops. But either way, whether at that low or maybe longing here with a little bit of a wider stop, yeah, your RR would definitely be watered for sure. But again, I've said this for a long time. When you get in early at the lows, best buying opportunities, they're below the open, they're below old lows. You can have tight stops, you get phenomenal RR, right? I would never disagree. When you get later into the moves, the probability increases. Again, this is just my opinion. I might be the only one out here saying that shit, but that's what I believe. And that's why, not with the trade I took on Thursday, not with ES, right? Buying below the low and then holding for the high of day. That's not what I'm talking about. The ES trade prior to that, you saw me longing damn near at 75%, taking very little drawdown, but still getting the highs. That's why I have that confidence, because we're late in the move and the probabilities are so stacked that it's not going to come back down here. It's not going to come back to 50. It's not going to come back to the low. It's going to launch up for the highs. Is the RR shitty piss? Yeah. At best, maybe like a 1 to 2, 1 to 1, no problem. But again, I trust the probability. I wasn't going for RR, if that makes sense. So hopefully that makes sense. But Brian, you can still buy an equal, let me rephrase that. You can still long with equal lows or low resistant lows. You can still do that. And that's what I'm trying to explain here. We can leave those lows left open forever. We could actually come back for that at another day, maybe tomorrow, the day after. I don't always know. Okay. And that's why I'm showing you Friday's regular trading hours low here that got taken. You could long that, or you could wait to see what the reaction is. Okay, we ran away from it. Here, now it's like, okay, you have all the evidence you need that we're going to run up these highs. Now you have it. Are we going to long on the way up? No. We want to long on the way down. What's the easiest thing here? That mitigation. You could even put your stop at the bottom of the mitigation if you like. Right there. Entry, stop, TP1 at, well, you could partial one at a new high. You could. Or since that's so close to the highs, you could just wait for that right there. And then TP2 would be that. And then, like I mentioned earlier, TP3, if necessary, 23,090 and above. So, yes, there are instances where you can long with equal lows. And today was one of them. Friday's low, boom. What manipulates, mitigates, done. So, just to clarify, just to make sure we're all on the same page here, if we take everything off, this was a buy model. This was a market maker buy model. You could either use this one or this one. I'll use the lower one just to keep it simple. Original consolidation, distribution, manipulation, low risk buy, first leg, second leg. Done. Anton, don't oversleep. Don't sleep on your dreams, big dog. And just hold on, I'm reading Ricky's messages rather. Yeah. You know, actually, Ricky, that you bring up a good point. The thing about I forget, I really don't cover this a lot. This was something that it was passed on, but originally it came from Larry Williams. Monday equities, to me, the only difference between Monday morning and the rest of the week, what do you guys think it is? I've said it before. But what's the difference between Monday's equities open and, let's say, Tuesday, Wednesday, Thursday, and Friday's equity? What is this? What is the key significant difference between Monday's AM and every other day? What is it? It should be real simple. What's the difference? What makes Monday morning so special? Think about human emotions. Do you guys, well, some of you might remember Christmas morning, but do you remember the night before Christmas? Because I don't know about you guys, but as a kid, December 24th, right? The night before Christmas, bro, I could not go to bed. Why couldn't I go to bed? Right, Robert, the anticipation. Oh my God, Sunday morning. I wonder what Santa's going to bring me, right? So you stay up late. You probably wake up super early because as a kid, you're excited for Christmas, for December 25th, right? That morning. Monday morning is the same way, but for traders. Because why? You can't trade Friday after close. You can't trade all day Saturday unless you trade crypto, of course. But here we're talking about like normal futures, okay? You can't trade Friday after close. You can't trade Saturday. You can't trade Sunday until the evening time. So Monday's regular trading hours has all the what? Impatient people coming in. All the impatient traders, all the undisciplined traders, all of the let's hurry up and do something. I need to press buttons. I need to pass my combine. I need to pass my challenge. I got to do something. I'm itching to trade, John. Right? You can see that in the charts. I mean, think about it. Think about it. Oops. Think about the first 30 minutes on Mondays. I mean, you can backtest this, and it probably won't be every single, don't backtest and be like, oh, well, this one particular day it didn't work, John. You're a fucking asshole. Bro, Monday equities, okay? Look what took place. Monday we opened, we rallied a little bit, sure, right? And then slammed lower. We slammed for Friday's PM low here, PM session low here. Friday's, AM low is down here. But there's a low there. Traders are going to want to short that. Why? Because they're shorting. Their idea is sell stops below old lows to get in sync with weakness, right? So they want to go, okay, we'll buy above old highs and we'll short below old lows. So they're shorting below the low. And they're in open profit, no problem. Friday's low, they're going, oh shit, look at that big ass candle. We're bearish, we're bearish. Let's short, let's short. So a lot of people are shorting in anticipation of a continued move lower. And that's exactly why the market says, all right, hold my beer. Look at that wick right here, right? It's going, okay, I'll go down a little bit more. I'll entice these sellers. I'll give an inch. But now I'm taking back a mile. Whoop. Market comes right back into the range. Market retraces a little bit. Now think emotionally for a second. Not emotionally, but think about what your emotions would be if you were short at the low, right? Never short the fucking low, okay? If you're short and the market rallies against you and then you get this down candle, right? What starts to take place? You start thinking, oh, it's coming back my way. Oh, man, if it'll just get back to my entry, I'll exit. Baby, come back. Any kind of fool, right? And then what happens? Boom, we start printing up candles, and you're going, oh, fuck, oh, fuck. Yeah, you're already on the wrong side. You got hooked in. You're short, and now your face is getting ripped off. And then same shit here. Oh, yeah, the market's going to come back to my entry. No, it's not. It ain't coming back down here. It has no reason to. You're fucked. That is the entire point of what? A mitigation. Smart money might still be short. Smart money may short, right, in order to take price lower, to get long down here. When the market obviously trades above this high, any type of shorts that they've taken to manipulate price, that's this pullback here. That is what it is designed to do. Okay? The same way red lights are designed. Okay, we're going to do 30 seconds red. We're going to do a couple seconds yellow. And then we're going to do, 10 seconds of green. Right? Or we're going to do that normally. But however, we're going to place weights under the concrete to say, okay, if traffic is building up, now we can change it to where everybody that's stacked, okay, we can let them go now. So we can control the flow of traffic, right? It's coded to do certain things, do this, do that. This pullback right there, that's exactly why I call it a mitigation. A lot of traders will call it a breaker. You can call it whatever you want. I don't care. You can call it an ass water entry. Who cares? All right? As long as you understand the function, the context. Smart money, if they're still short, and they've also long too, but now the market has tipped its hand. Hey, smart money, they're going to give them a little knock on the door. Hey, we're fixing to run higher because we're going for these highs up here. We're going for these highs up here. And if need be, we'll just run however many highs, along the way. So you have a chance to get out of shorts, even if it's a loss. No problem. Why is that? Because they can manage to lose or break even on shorts because they're long from down here or long in here, and then they're going to ride it higher. So real quick, just make it simple. If you lost, easy example, $10, right? Because you shorted down here and then the market rallied, you're still short, the market comes down here. Okay, you take the $10 loss, boom, right? But you're long from here, and then you exit your short and then add more longs, and then now the market's up. And where are they going to distribute? Above old highs and above old highs. So you might have lost, smart money might have lost $5 on the shorts, but now they're going to be up like 20 on the longs. Who would not take that? Who would not do that? You give the market 5, you take back 20. If you could do that every day, you'd probably take all the money you could and put that shit in there. I don't mind losing 50 to make 200. I don't mind losing $5,000 to make 20 grand. Right. But now with smart money, they're on a completely different level, a level none of us will ever get to. And I hate to say that because it sounds a little bit negative, but you think these interbank traders are trading with fucking 10 lots, 5 lots, 5 contracts, 10 contracts? Are you shitting me? No. No. They're trading lots that, personally, I don't know what it is, but I would imagine it is a fuck ton. Okay? I imagine if they're the ones moving this bitch, yeah, it's going to be disgusting. But guess what? You can still trade micros. You can still trade E-minis as well. You may not throw down 1,000 E-minis, but why can't you just throw on one on a funded account? What's wrong with that? You saw me last week. I made $1,200 in like 45 minutes. Is there anything wrong with that? No. There's nothing wrong with that at all. Once you know how markets operate and you start to take good trades and you're becoming consistent, and your win rate is good, right? Favorable. Once you know what you're doing, now you can start scaling up. Now you can. You see what I'm saying? But anyway, just to kind of recap, I know I'm all over the place sometimes, but I freestyle and I just do what I want over here. We had a market maker buy model. If we're going to go higher, we're going to go lower first. We did that. What manipulates, mitigates. We did that. The markets still do the same shit maybe not every day on the asset that you want, but at least once or twice a week, you're going to see what? A really good trading opportunity. You only need 1 or 2 per week, and the market is abundant. You know what I mean? It's kind of like going to a I forget the guy's how he was related to me. I have some family in Mississippi, and one of them has a blueberry tree, and this fucking blueberry tree, bro, is like, I don't know, almost as long as a football field. It's fucking insane, and it ain't nothing but blueberries, right? If I was hungry for blueberries, at least, and I went and I picked some off and I ate some, you think I'd be able to eat all of those? No. I only need to eat a few, you know, maybe a couple handfuls or something, and then I'm satisfied, right? The market's the same way, bro. There are so many and this is just NQ. There's so many setups every week. You know what I mean? And it's that simple. Let the goobers get stopped out, or you could buy below old lows too, right? But once you realize that you're on side, or that you think you're on side, okay, what is this right here? If this was a stop run, right? Because look at that move here, boom. Okay, well that is the last imbalance right there, yes? That's the bearish one. Boom. Oh, well that got traded through. Oh, okay. Well, it ain't fucking bearish then, is it? That's the inversion model. My inversion model, I'm sure there's probably hundreds of inversion models out there too that probably say something similar. It's just the last imbalance prior to a stop run. Entry inside the inversion, which is also at the low end of the mitigation, right? Which you do not, it does not have to trade through it for you to trade it. And I'll expand more on that in a minute too. That's the inversion model right there. Stop at the low or at the low end of the bottom because you have two imbalances on the way up. Right? What do you do when you have two? You take the first one, stop at the second one. Now, do you understand more and more why all these rules are interconnected? Yeah, John, but I never write it down. Well, why do you think you get to the charts and you fucking forget? Or you see it, but you don't trust it. Right. Inversion model, two imbalances. So what is that? You could enter there. You could put your stop at the low. That's a wide stop. I personally don't do that. Or I try not to do that at least. 1 to 2. It's good for me. It's good for you. Right? 1 to 2 is right there. And maybe 1 tick for commission. Boom. That's at a new high. That's not even at the terminus of the buy program. The terminus is Friday's high. That's way up here. But that's not the model I taught you. The model I taught you was a 1 to 2 and that's it. Base hits. It's that simple. That's like, come on. And yeah, Lib, right. That is a good point. Anton said, how do you estimate which target it is? So if you want to watch the free beginner series, I suggest to do that. My targets, okay, are going to be, to make it complicated, it's the terminus of a buy program, or let's say we don't really have a sell program in here, the terminus of a market maker sell model, which is a sell program, a buy program, then a sell program. In other words, to keep it simple, if I'm short, I want to target low resistant lows or equal lows. Either one of those is going to be a part of the original consolidation. They're not different. Okay? They're not different. If I'm long and I'm targeting the terminus of a buy program, that's going to be either low resistant highs or equal highs. Okay? That's what my target is. Now, if I'm trading stock as an example, that's a little bit different because I may just target a gap or the beginning of a gap or maybe the full gap fill. It just depends. So that's a little bit different. But in currency as well as index futures, that's what it is. And you learn that in the free beginner series too. Toby, that would not surprise me at all. That wouldn't surprise me. Okay. Now, let me go over this one more time because I do feel like people still don't understand this. And I know for a fact they don't trust it. I've said this a few times over the years. You can trade, okay? You can trade a concept before it is traded through. Okay? Now, most educators will not tell you that. They say, oh, wait for the break of structure, wait for a new high, wait for the shift in price delivery, wait for this, wait for that. Wait. Right? All this waiting. Now, it's not impatience, but if you know, okay, we have a low, we ran higher, slammed lower, and now we're back into these up candles here. You can go, okay, it just took out a low, right? And we left these pretty beefy up candles, right? A couple of Corvette candles, if you will, right? Actually, these are the Corvette candles because they're attacking liquidity, but I just got to have some fun. These up candles, you know, are going to be a mitigation. You do not, okay? You do not need to wait for a break of structure there. Or if you look at that high and like a break of structure there, you don't have to wait for either one of those. You can trade the mitigation while price is still there. You see how it goes into the high end of the mitigation and then back into what? The discount end. That's tradable. That is tradable. And that's exactly why we pointed out some concepts on the 1 minute time frame. Because the 1 minute inversion is in the discount of this mitigation. Right? The premium end is here. Right? Because that's the upper half. We don't need the mid. Well, yeah, we don't really need the midline on the halfway points. That's the upper half. The bottom half is here. So what I'm telling you, again, because I've said this at least 3 or 4 times already on various live streams, you can trade the discount end before this here. Yes, you absolutely can. Almost anything within the leg of manipulation is tradable. Okay? Did you hear that? Did you hear that? The manipulation leg here, or sorry, the manipulation leg here is lower. But the mitigation leg, sorry, to clarify, the mitigation leg, anything inside of that is permissible to trade. Meaning from that low up to that high. Now that's, again, that's a big range. I may not want to trade like all the way the fuck up here. No. But this inversion or this second imbalance on the way higher right here, where is it at? It's inside the the mitigation, excuse me. And it's inside this leg. That's tradable. Right? Because what happens after that? What do you think? Look at the chart. It's right here. We worked the discount end a couple times. Where did we not go back to? We don't go back to the discount end, do we? Why do we not do that? Well, you know, John, I was waiting for a new high and then I saw the mitigation. And you say all the time that concepts have premium and discount ends, and that's pretty cool. So let me trade the discount end. I want a better entry, right? So let me put my entry at halfway or in the discount. It never goes back in there, does it? It never goes back. It hits your mitigation on the 5 minute, right? It hits the mitigation. It even, you know, digs into this down candle too, if you want to incorporate that. Right? Doesn't go back into discount. Why doesn't it do that? You ever thought about that? You ever looked at a chart and just thought about it? Just look at the chart. Why doesn't it do that? It did this and it did this, but why doesn't it do this? It's for the very same reason I told you it's not going to run that low again. That low was worked. The low end or the discount end has already been worked right there. We got massive wickage here. We got a down candle here. We got an up candle here. We got a wick right there. And then another wick right here. It's already worked whatever that, like 905 to 920 area, that little range of 15 points, that's already been worked. There's already been business conducted there. It has no reason to go there. So it does dip into the mitigation, but then guess what? It stays in the upper half. It stays right here in the upper half, right? What does that mean? When a concept doesn't go back, let's say the breakaway imbalance, right? That's bullish. If a concept, right? If price digs into a concept, does not go to the low end, that's really, really fucking bullish, isn't it? Yes. This is not new. You're not new to this. Unless you're new to my live streams, this is not new to you, right? And then look very closely. And again, I didn't see it. At 940, I was not in front of the chart. But what is that right there? Just look at it. What's that, baby? That is a, what? That's a little gap. Yeah. That gap gets traded through and becomes a what? Inversion. Look at that. Look at the precision on that. Hits that, wicks it, trades higher, then runs for all the highs we've been referring to already. So, okay, we didn't get all the way up there, but not a problem. Just to put those back on for studying purposes and discussion purposes. You don't even have to go down to 1 minute. That gap is still seen on the 5, right? Look at that. Inverted gap inside a mitigation, post manipulation in a buy program on the way to opposing liquidity. Oh, does that sound familiar? Inverted concepts on the way to opposing liquidity. Wow. Interesting stuff, isn't it? Interesting stuff, isn't it? You don't have to catch the low. I know Ricky does it a lot. Ricky's built different. Okay. Everybody can't catch the low. Okay. Sometimes we have to wait. If you do wait, that, okay, that still, I know some people might not agree, but that right there is still a sniper entry. Okay. That to me is still a sniper entry. You're wicking in before the move, before the Corvette candles come in. Okay. You see me first at a red light, you ain't gonna see me for very long. You get me? As soon as that bitch is red, or as soon as that bitch is green, I'm gone. That's what that is. I'm gone. No, that's solid, Ricky. That's solid. You shorted, if you shorted and then caught that move lower, and then after this went long in here or in here, I mean, I usually don't tell my students this a lot, but that's pretty much like what smart money did, in my opinion. So if smart money shorted to yoink that liquidity and you were a part of that, you were basically on side for the short, and then you swapped on side to go long. So you didn't do anything wrong, in my opinion. But I'm not always the type. You saw this about a week, maybe 2 weeks ago. You saw what I did one time. I took a scalp and I said, look, we do have equal lows, but if it's going to be a market maker sell model, it's going to take a high first. So if we're on the way to this high, I scalped it. Right? It's like, okay, we're going to be bearish, but we're going to run this liquidity first. So I'll at least be a part of that move. Right? I think some people call it the buy to sell or the sell to buy or whatever. I'm not entirely sure how people view that. Maybe that's similar. I don't know. But I usually don't do that. I usually don't short for the lows because I'm too focused on the highs to want to short. But again, you have to remember, I'm just one person. Okay? I view the market a certain way with certain opinions, and there's certain things I'm used to. I don't know everything. I don't take every short and every long, and I don't ping pong every day. I don't do that. So there are certain, as traders, right, we bring our personality into our trading. You know what I mean? And you will see that. The same way you can view other educators, and they might do things a little bit different. But at the end of the day, all we're trying to do is take good trades. We're trying to be on side and well, ultimately try to make money is the point. But you get what I'm saying. I may think, oh yeah, they're going to run those lows and then go higher. I may just wait for that. And then if it gives me, okay, now we've got the mitigation. Okay, I'll take the mitigation higher because I'll trust it. Because sometimes I'd rather just take a win than to try and catch a really, really good RR trade. And that's the beauty of trading, bro. This shit is almost like art. There's so many opportunities. There's some, you could short, you could long, you could do both. You could pyramid, you could not pyramid, you could partial, you could not partial. There's so many different ways to trade profitably, right? You get in early, you can get in late. I mean, there's so many things. And as an educator, I try to show you what's available to you. The same way I showed you gold a couple weeks ago, and I was like, hey, you saw this move and this one and this one. This was a 1 to 3. This was a 1 to 2. This was a 1 to 1. That's 6% right there. I don't trade like that. Sometimes I do, but I'm just saying, look what's available. You had the 3 to 1 and a 2 to 1 and the 1 to 1. You could have traded any of them. You could have traded all 3 of them. You could have traded 2 out of the 3. There's so much available to you. And that's one of the hardest parts about being an educator. Because number one, most people don't know like probably half the shit that I've shown you. And even out of the stuff that I've shown you, how many live streams have we done in 2 years? 4 a week, 52 weeks a year. I don't know, man. That's like 400 streams. That's 400 hours of me yapping, dog. There's a lot of juice in that. And there's so much available to you. Find out what you like, find out what you trust, and then that's how you build your model. Your forever model, they call it. The one model that you love, that's your go-to. That's the one you size up on, your forever model, right? I haven't really solidified like what my version of like my forever model. But if I had to say, it would be something related to the second leg of accumulation or the second stage of distribution. But I don't really have one single model where it has to be a mitigation. It doesn't have to be a mitigation. It could be an inverted gap. It could be just a fucking something based on the next candle. You know what I mean? So I work within a range of models. I don't have just one model. But if you told me, John, you have to pick one model and that's it, you can't do shit else, well, that would kind of suck, to be fair. I guess if I did, it would either be the mitigation model or something as part of the second leg of accumulation and distribution. Personal preference. Yeah, well, these are gray lines, but yeah, that's still good though. That's a good long, because for all the reasons I've already explained, we already took lows. We've already worked the 50%. We've already worked the bottom half of the mitigation. That's it. All we have left is the upper half of the mitigation and that inverted gap. That down candle, that could be something too. I mean, there's different entry techniques in here, but I'm saying as far as like, this is the second leg of accumulation. So as long as you're buying in a buy program, it doesn't matter because you're on side. The only thing that matters is if you're trying to get, you know, the what we used to call the social media entry, which is why I said don't go for that. Just try to get on side. But anyway, it's a good trade, Ricky, is what I'm saying. I know I yap a lot. It's a live stream, but I'm trying to give you your props here. It was a good trade. It was a good trade at the end of the day. 830 is there. So if you're buying below 942 or 943, you're in a discount. That's all a discount. Everything in here is a discount too. Samir, I rarely trade gold. I do sometimes, but I generally do not day trade gold. I'm pretty happy with silver though, with my physical silver, because she's flying. She's printing her own Corvette candles now too. Yeah, no, Ricky, I get what you're saying. Good to wait for that sign of strength, because we had tried to short it New York and thought we had that thing about to fall. No, and yeah, that's what I'm saying too. When it printed that first down candle here, and we got to like 850s, we got that big ass down candle. My own opinion, I was like, okay, we're probably gonna run these lows down here, and then 5 minutes later, boom, we trade back up into the 920s, and now we're near 50% of the range. Right, like right near 50%. That, yes, is I teach traders not to trade around 50% of a range. There are times where you can, and that's why I'm trying to show you what I showed you today. There are beginner lessons, there are like intermediate lessons, and then there's learn how to make a fucking bag. You know what I mean? That's what I'm giving you today, how to make a fucking bag. How to know when to long at 50% or even above it. How to long in a premium. Yes, you can do it. I tell beginners generally not to. The same way I tell you don't long when there's equal lows. Yeah, that would have prevented you from taking any trades today. Because as a beginner, I do believe that rule will prevent you from loss. Just like right here, for example. Because we had some lows right here that you might have thought were equal. And if you didn't long, those lows got taken. And that would have saved you from a loss. That was kind of the point to that. Like building those rules. But over time, you start to realize that it's not that rules can be bent or broken. It's just you know when to abide by them and when there's an actual high probability trade at play. If that makes sense. That's the absorption play I keep talking about in the Telegram. No, it makes sense. It makes sense. And it's good trading. It's bread and butter setups, as they call it. Easy, just day trades. Textbook plays make for easy days. You know what I mean? Oh, you like long gold, Anton? I don't know about that. I don't even think we looked at ES one time today. We've been neglecting her today. That's okay. And almost every time, even if NQ manipulates, it's the point. It's $20 a point versus 50 on ES, but NQ has a much larger range. So even though it's less per point, the larger range outdoes that. So meaning, I think I explained this last week, you can do the math. If you go and went and measured the low of the day on NQ up to the high day, and then did the same thing for ES, I can almost tell you 9 times out of 10, NQ, you'll make more money. You'll incur more risk, but you'll make more money. So yeah, but you'd be correct. Technically, ES was under accumulation because we did not make lower lows the same way that NQ did. And then guess what? We still have, it's kind of a shitty mitigation because we do have a higher low here, but it still retraces and then still does what? Trade higher. Okay. These highs suck though. Friday's high sucks. This is shit. This is ass. That's cheeks. But I will tell you this. In the electronic trading hours for ES, I do believe the buy model was a little bit cleaner. Because we had Sunday's low, rallied, and then I think London. It's fucking London every time, dude. London every time. London loves to manipulate, and if London doesn't manipulate, equities open might. Or if it doesn't, that's going to be a target. You know what I mean? So there's always, like, London is just, it's dirty in a good way. Look at that turtle soup right there. A low, and then we have a lower low below an old low, right? Your manipulation of the buy model was a soup. Lower is buy, first stage accumulation, and then that retracement here in equities was the second leg to go higher. So this to me was a market maker buy model. I just didn't like our consolidation here, because what the fuck is that? What was Friday at 2 o'clock? That random wick right here. That ruins the drawing, you know what I mean? That ruins the consolidation for me. Unless... See, this is where things get ambiguous, because we'd have to mark up the whole thing like that. Original consolidation. And then this was a level of distribution, manipulation, accumulation, and then reaccumulation. Boom. But yeah, this sucks. The way we made Friday's highs for ES sucks, right? Like if that was a restaurant, this is a 1-star restaurant. 1 fucking star is here. And Q, on the other hand, that's a 5-star restaurant. Those highs right there, clean. Those highs right there, even cleaner. That was beautiful. I like those highs. So yeah. Do you guys love trading or what? Drop some ones in the chat, man. If you just, do you love this shit, bro? Even if you didn't trade, I didn't trade today. Even if you didn't trade today, learning how this stuff works. Drop some ones if you guys just love this shit. Because I do. I love it. I don't know anything else. Bro, I can read charts better than I can read English, okay? Like, this is it for me, man. Trading is fucking chef's kiss, baby. So it was like, before pre-market, I wanted to play that 1 hour demand area and see the 4s down. So it is what it is. Or at least see a run on those lows with the same type of appointment ended up getting today after. Jonas took NQ for higher prices today. I'm blessed. Right, Jonas. You see how easy that is? He said, give me the baby oil. Oh my God. I don't know about that one. I don't know about that one. But I love it, especially when I'm on the right side. Small loss today. Still love it, Scott. I'm long on ES. Got in 6297. What language is that, bro? I think the chat kind of distorts your message there. Well, anyway. I don't know what the PM session is going to bring. I'm going to stick to what I said earlier. This doesn't look bearish to me. It can just go back into the range and then fizzle out into the close. That is a possibility. We've moved quite a lot today, right? Our equities, I believe, is this candle. You know, we traded down to 840s. We're a little above 23,000. I mean, we've moved 150, 170 points or something already, as far as like range bound. Oh, I lied. It's over 200 actually. Okay, so we've already moved. We have already had a over 200 point range on the day. It may not see another 200 points higher. So I do think AM session kicked ass today. I think the PM session today is going to suck. I think today's PM session is sucky. I think it's ass. Because what's the opportunity here? What's the opportunity? Shorting above old highs? I don't know. I don't trust that. I just don't trust that. We've seen such a nice buy model. We've seen such nice buy programs. Dow just sucks. We're not even going to bother with her. You like silver though, dude? Oh, it's a down day now. That's a bitch. But it was at 39 earlier. It was at 39. As a matter of fact, the silver futures were up to 39.5, dude. Silver's been pumping. She's been doing some backflips higher. Love that. Oh, it's a sniper drawing. It kind of looked like a gun, but the message cut off. Oh, Shay caught 200 points? Oh, damn, you're a dog. You're a dog, bro. That's crazy. But good job. Anyways, the only other thing I have is McDonald's. I probably should have told you about McDonald's earlier, but I can't tell you about everything, bro. Oh, you know, sometimes I forget, sometimes I don't remember. The Tuesday of last week, the 8th, I became a little bit interested in McDonald's. We had a low from April that got taken. We had a very small rally, and then we had this. So, what is that? Well, there's that low, and then we had a lower low here. So we did, in my opinion, have a soup. Right? We had a little soup here. And that's more than 20 days. So technically, this is the real turtle soup, because that's more than a 20-day range. But anyway, we rallied, and then we had some down candles here. And if we zoom in on the 1 hour, that's what this is. It's a more defined, right, low, high, lower, low, and then we trade through it. Those up candles here. We had some short-term lows there, so it was that run in the morning on Tuesday. That is where along McDonald's. So we didn't really do a lot on Wednesday. I was kind of like, okay, what are we gonna do? And then Thursday printed. I'm like, okay, this is probably good. This morning was a little bit shaky because we came all the way back down here. I was like, oh fuck. And we come all the way back up. I'm like, bro, what a opening, like 20 minutes. It was crazy. Look at this shit. Gap down, slammed lower, cleared out Friday's lows, and then now we're higher. So to me on the daily, I like where we're headed. I took, I don't have stock. Okay, I traded options here. And my strike is 320. So right now it's pretty good. If we do not go higher, if we start to consolidate, that's not going to be good. I wouldn't like that at all. And if we traded back down, I think to the low end of this gap here, that would be a problem for me too. Like I'm in from in here, right? Like that Tuesday right there, I'm in from that. I like what we did today so far based on our daily candle, but if we trade back to the low end of this, I'm probably just going to cut it. And then cut it as a break even probably, or maybe a slight profit. But I'm aiming for up here. Because why? Manipulation, original consolidation. So this would be what? The low risk buy. And right now, it looks like we're seeing the first leg. And that would make sense given these highs right here as well as this gap. I may exit here. Like if we can get above 305 into this gap, I might exit that and then re-enter on a retracement for the 320. Part of me may do that. This gap right here. That to me should be such an easy target. We should have no problem getting up to 305. Unless I'm wrong. And then we don't do it. Them snack wrap. Look. The options were not cheap, okay? They were not cheap. So if we do this pretty well, I'll be able to buy plenty of snack wraps. Plenty of snack wraps. So but anyway, my stomach's rumbling. We've been here, oh, it's already almost 1:15. We've been here for a while. But that's it. That's all I got for you today. So it is a lot. It's a lot of you know, details, opening prices. We didn't even talk about midnight New York today, but we talked about mitigation. We talked about why, you know, things are the way they are, why Monday is different from the rest of the week. Monday equities open is different from the rest of the week, right? All the emotional traders wanting to get in and do shit, and well, they got wrecked. If you shorted and held on to it, yeah, you got wrecked. Or if you longed at the open with your stop below lows, yeah, you got wrecked, right? But what did I tell you Friday? Or maybe it wasn't Friday. What did I tell you last week? When are the best trading opportunities? After everybody gets knocked out. After everybody gets out and they're scared, I don't want to enter anymore, you know, whatever. That's when the best opportunities are. All right. So with that being said, y'all be good, be blessed, man. We'll be here same time, same place tomorrow on Tuesday, the 15th for another free live stream, baby. They're all free. All for the free. See y'all tomorrow.
What you
certified hood classic.